Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is November 8th, 2018, and rather than look at an individual market tonight, what I'm going to start to do is start looking at the grand scope of what the markets are doing as a whole. And so what I'm going to do is just kind of focus a little bit here on the technical rating. And I just want you to see that we have a lot of mixture here. We got a lot of ups and downs and flats. There's not a lot of consensus either to the upside or to the downside. And when you get this type of a condition, it just simply means that the markets themselves are fighting against one another. There's a lot of hedging going on, but there's no major directional play to the market, whether that's to the upside or to the downside. And that's very pronounced when we actually take a look at the trend level. The trend level basically looks at 40 different markets. You can see them all listed here on the left hand side. And what it does is it tries to measure the strength of a trend. Traditionally, when you get a trend that is emerging, it starts to become more and more explosive as it breaks out to the upside or there's a breakdown to the downside. But in that early stage, even the mid stage, there's often a very strong surge to the market, up or down. And what we want to do is we want to measure that strength of that particular trend at any one time. And so what we do is we'll take a snapshot every evening and look at how strong the trends are. And what we're looking at here is something that's very quiet. Down here at the very bottom, aggregate trend level for all the markets. It's at 94.11. When you're below 125, below that, it means that the markets are quiet. So what we're looking at is we have a strong bull market, a strong bear market, but we have nothing in that. Those are the ones that are in blue, but we have nothing in orange. And the orange are the super strongs. And so sometimes what you'll find is that across the board with the 40 markets spread across 8 different sectors, you're going to find that there's a lot of trendiness to the market, and more importantly, they're very, very strong. And what we have here is in this charcoal color, we have 67.5, call it 67% of the markets that we look at are in neutral phase. They're not really bullish, they're not really bearish, they're just kind of there. They're kind of in a non-trending type formation. And those markets that are slightly bullish or slightly bearish, those that are in this kind of tannish color right through here, that make up 27%. Some are bullish, as you can see right here, 7.5. Some are bearish, 25, but they're not super strong. So when we look at these numbers and we count them up, what it comes up to is the aggregate, 94.11. And that tells us that the markets as a whole, across a wide variety of markets, across 8 different sectors, that things are quiet. Now, there's always going to be a couple of markets that are strong, as we have with natural gas and Kansas City wheat right now, as far as kind of explosive markets that are underway. But the vast majority of them are quiet. So what does this mean for us? Well, what it means is the pendulum swings from very quiet markets to very explosive markets, very strong trending type phases. And right now the pendulum, especially with it being below 100, and it's at 94.11, when you get that type of a condition, it simply means that the markets as a whole are very, very quiet, and that pendulum, as I was referring to, can only stay there for so long before it starts coming back the opposite direction. So what I would suspect is that we're going to start to see a lot more volatility in the market. Things are too quiet right now. Yes, you can point to individual markets that are doing well, and you can point to markets that are in trending phases, but those trending phases may not necessarily be strong trending phases, and therefore things will pick up, especially when we're as quiet as we are right now. If we look at the directional play for all of our systems, it kind of bears out that yes, we have certain markets that are highly leveraged. I'll point this out, that those markets that are pointed to the right, those are bullish. Those that are pointed to the left in this grayish color are bearish. Those markets that are in black are perfectly hedged, where we have, in this case for Australian dollar, 3 systems that are long and 3 systems that are short. So 6 systems are actively trading the market, but they're hedged because there's a lot of ambiguity as to what's going on. When we have certain conditions like we have here on the orange, we can have long systems. Obviously, you have 2 long systems here in the 10-year notes, but we also have 1 short. So it's got a long hedge to itself. This blue right through here, this represents obviously pointed to the left-hand side. Soybeans are short the market with 2 systems, but we're also hedged with 1 on the long side. So this is a nice little breakdown for what is going on with the individual systems, but there's a lot of hedging that's going on. There's not a lot of straight out directional play as we have here perhaps with natural gas, but we have a lot of markets that are either very quiet, where they don't have that many positions out there like we have with, say, platinum, but we have a lot of hedging or partial hedging going on the long side and the short side. So again, this makes my point that when we look at the trend level and the fact that it's very quiet and the systems are basically in a stage right now where they're protecting themselves. They're not entirely sure which way things are going, and so they're waiting for more of a directional play before we'll start to unwind some of our longs and shorts and take more of a stronger emphasis on one direction or the other. So the systems are poised, they're set, they will do certain things, but because of how quiet the markets are in general, I think that we're just kind of in a lull period right now. And again, with this pendulum that I was talking about, when the market becomes too quiet, it will start coming back into something that's going to be much more explosive. So tonight's deep dive is really just simply looking at what the systems are doing, which relate obviously to what the markets are doing, which is a lot of nothing because they're very quiet, and that pendulum is going to swing back the other direction, and I think that you're going to see some more volatility here going into the next couple of weeks and months. So what we have is a major holiday coming up with Thanksgiving here fairly soon. I don't know if this volatility is going to pick up before that, but I do believe that we will see some increase in volatility between Thanksgiving and the Christmas holiday. And from that standpoint, when we're in that particular phase, just expect some increase in volatility here because things are way too quiet. And the longer this quiet phase lasts, according to the trend level, the more explosive the market will be, or markets will be, when they actually start to get out of this kind of lull type period. So let's watch the markets and just simply understand that there's not necessarily a lot of action going on because there's not really a lot of action going on in the markets as a whole, and a lot of times you just simply have to wait for the markets to make those moves in order to get the systems to really kick into gear. So that's kind of why there's a lull period right now. Hopefully this makes sense, and we'll take a look at some more markets and more systems in the near term. Thanks again for watching. Bye-bye.